NIO stock just wrapped up Thursday's session, and after 3 explosive days, we finally saw a more tempered trading day. But don't let the red on the screen fool you, this was a controlled pullback, not a reversal. The stock closed the day at around $4.83, down just under 2%, and still holding above key psychological support at the $4.80 level. In fact, if you zoom out and look at this week as a whole, today's movement looks more like a pit stop on a long road trip than the end of the journey. So in this video, let's take a closer look at what happened during Thursday's session, the latest developments in the NIO story, and why today's move might actually be setting the stage for the next leg up. First, let's talk about the price action. After surging over 10% on Tuesday and holding strong through Wednesday's consolidation, NIO opened Thursday at around $4.92 and traded as high as $5 early in the session. But then it drifted lower, with some profit-taking and market softness pulling it back to the low $4.80s. Now, here's what's interesting, volume remained strong. More than 63 million shares traded hands, which is still nearly double NIO's 50-day average. That tells us people are still engaged. This isn't a volume drop-off or a dump and disappear situation. It's a market catching its breath after sprinting uphill. The rally earlier this week was no fluke. It was driven by a convergence of news, sentiment, and technical momentum. But what's sustaining the narrative is a deeper shift in the company's fundamentals and strategy. That's why today's dip might actually be healthy. It could be the pullback that lets more buyers step in before the next catalyst. Let's revisit the Onvo L90, because this continues to be the center of attention. Test drives officially began this week, and early feedback from Chinese auto bloggers and local media outlets is starting to trickle in. It's still early, but the buzz is building. This model represents NIO's big push into the mainstream EV family market, a space where demand in China is still strong, especially for 3-row vehicles with extended range and solid interior tech. Remember, the L90 is not just another product on the shelf, it's the first major release under the Onvo sub-brand, which is NIO's bid to expand its total addressable market. And the timing couldn't be better. Consumer confidence is rebounding, fuel prices are back on the rise, and local EV subsidies are continuing into the second half of the year. On top of that, the L90 isn't just about sales, it's about conversion. It gives NIO a chance to bring in a different type of customer and convert them to the NIO ecosystem. That means battery swap memberships, service subscriptions, and recurring engagement across the company's growing infrastructure. This ties directly into their battery-as-a-service model, which many investors still underestimate. Speaking of battery swapping, this is another area where today's quiet tape doesn't reflect the bigger moves happening behind the scenes. NIO now has over 3,100 battery swap stations across China, and they're expanding rapidly. But what's more significant is that about 20% of these stations are now turning a profit, especially in high-traffic city zones. That's a big deal, because it shows that the model is not only scalable but also financially viable. And with CATL's recent investment in Mirattery, the joint venture powering NIO's battery swap rollout, we're seeing stronger institutional backing that could accelerate growth in this segment. Now let's shift gears to the technical side and look at what's happening with short interest. As of this week, short interest in NIO remains elevated, hovering around 9 to 10% of the float. Borrowing costs are still high, and that means any spark, positive earnings, pre-sale surprises, a strong analyst upgrade, could cause a wave of covering. The massive trading volumes we saw earlier this week were not just retail enthusiasm. There were signs of institutional involvement and algorithmic pressure, especially around key breakout levels. Today's pullback didn't break any key technical support levels, which is important. We didn't fall back into the previous trading range. Instead, we found a higher low, with a potential new base forming around $4.80. So what's next? What should we be watching? First, keep a close eye on test drive commentary. If consumer feedback on the L90 continues to trend positive, and if we see hints of large pre-order numbers, that could trigger the next move upward. Second, any update from NIO on Q2 deliveries, margins, or guidance will be critical. We know that in Q1, gross margins expanded to 10.2%, and revenue grew over 20% year-over-year. If they can maintain that trajectory and hint at break-even or profitability by late 2025, that would be a game-changer. Third, watch for new analyst reports. Citi already put NIO on its 30-day catalyst watchlist, and if other firms follow with positive revisions or raise price targets, we could see another round of momentum buying. And finally, keep monitoring volume. If NIO can sustain high volume on up days and lower volume on down days, it'll reinforce the idea that the rally is being built on strong footing. So to wrap this up, yes, NIO dipped today. But no, this isn't a reason to panic. If anything, it's a natural pause in a much bigger story that's starting to gain serious traction. The stock is still up big on the week, sentiment is shifting, fundamentals are improving, and product momentum is building. This might just be the calm before the next leg higher. Thanks for tuning in. If you found this update helpful, hit the like button, subscribe for more EV stock coverage, and let me know in the comments, are you buying this dip or waiting for more confirmation? Until next time, stay smart, stay patient, and stay invested.